Welcome to holisticinvestment.in YouTube channel. We help individual investors like you to take a right financial and investment decision. In India, investment ideas are normally sold rather than bought. When you buy stock or a fund, do you invest based on the CEO story and fund manager story, or do you buy based on your own logic and reasoning supported by facts? What weightage to be given between the narratives and numbers? We have investment expert Usha Nair with us to demystify this. Usha, could you please help us understand narrative investing versus number investing?
We love stories. That's how we are. From childhood, we love stories. And there are people who can make stories for you. Let me show you this. If you see this image, a lot of you must have seen this image in WhatsApp. When you go to some destinations, especially hilly areas, the tour guide will tell us, look at those two hills. Doesn't it look like a lady sleeping? Doesn't it look like a lady sitting with her hand, chin on the hand? All these imaginative things. Ultimately, it's two hills. It is a forest. It is a cluster of trees, etc. So when you look at this cloud, this is actually a cloud formation, but I can make you feel that this is looking like a horse. And I'm sure a lot of us have seen all these images as WhatsApp forwards, Instagram, Facebook, etc. This is a cloud. This is not a horse. It is my storytelling ability that is able to make you imagine that this is a horse and create a narrative around it. So what is a narrative that I'm going to show? 2006, the equity market gave 46% return, 49, 50% return. 2007, really good market before the global financial crisis happened. Another 50% return happened. 2008, market corrected significantly. Gold gave a return of 26%. Again, in 2009, equity gave a return of 83%. Now I can build a story. 2010, you will make money in equity, and then in 2011, you will make in gold, because this pattern will continue to follow. This is the horse story that I can make. Let's see what ultimately happened. This is what happened. In 2010 and 11, gold gave return. Equity didn't give return. Equity gave about 19% return. Then in 2012 to 14, equity gave return. Then equity became very bad, gold became very bad. Now, if you see the full chart, there is no story that is there. There is no horse. I am not able to connect a lot of clouds and say and predict that tomorrow it will be equity, day after tomorrow it will be gold, this year it will be real estate. No such predictive capabilities is there. It is just a theory that I am building and saying, if I'm saying. The only answer, if you ask me, what does the market look like for the rest of 2022? What do you think the market will do in 2023? The only answer, if I'm honest, I should give is, I do not know. I cannot predict. Anything can happen. But what can happen by 2027? What can happen for my portfolio by 2028? With reasonable certainty, I can say you will make much above average returns if you stay invested for 5 years or 6 years. That is the only certainty that you have in the short term, in the next 6 months. How will markets open on Monday? What will be the return of the stock market in August 2023? Because we are completing August in August 2022. What will be the 1 month return in September? What will be the Diwali level of Sensex? We do not know. But people try to connect all of this and create predictions on things which we do not know. So just like the horse in the image, it is not a horse, but I'm leading you to look at it through the lens of a horse. It is, okay, there is some similarity with a horse. If I see from that, if I tell you, see, isn't it looking like a horse? You're tempted to believe it is looking like a horse. Logic should tell you, boss, it's a cluster of clouds. It is nothing. I mean, you are telling horse, somebody may say elephant, somebody may say unicorn, something can happen. But we don't say that. I'm navigating you, I'm coloring your mind, painting a picture to say that it is a horse. Similarly, giving some narrative, I'm creating a picture of authority in me that I know how to predict. Listen to me. All I can say is, I do not know how to predict, but what I know is the journey from 2006 to 2020 2000, like I showed in DSP small cap, 2007 to 2022, it is 19%. For the next 15 years, will it be 19%? May not be. But will it be near similar? Will it beat or will it be much better than what I otherwise would do? Definitely yes. So let me give you a another fallacy or narrative that is made. Oh, you have got a lot of money. You have tried investing in mutual funds a lot. Now you should move to invest into PMS and AIF because mutual funds is boring. It is meant for retail investors. It is not meant for me. I'm a rich investor today. I've tried my hand in mutual funds, so let me try this AIF and PMS. So this is the narrative, the horse story that you hear. Another narrative. This is actually a data from one of the mutual fund, PMS compilers, someone who compiles all the returns made by PMSs. I've taken, I'm just showing you 1 month, one example, not that we should look at 1 month return, but because last month, the month of July, markets did quite well after the sharp correction it saw between October to June. So there are small cap PMSs. This is not one single PMS. There are many PMSs that are there in the market with different strategies. This is the average of those strategies. How much each one made. So small cap PMSs made 9.75%. There are mid cap PMSs which made 9.7% 1 month return. Okay. Large cap made 9.5% return. Multi cap made 9.35% return. Okay. And here it says comparison of returns of categories of PMSs for the month of July 22. Now I'm going to show you. This is the mutual fund returns for the same categories. There are about 20-25 mutual fund schemes in each of these categories. We have about we have about 20 mid-cap mutual funds. It has given a 10.2% return. A PMS has given 9.7. Not much of a difference, 0.5% difference here or there. A small cap PMS has given 9.75%. All the mid-cap funds in the mutual fund industry has given you 8.6% return. There are large and mid-cap combination ideas. It's given a return of 9.5%. Large and mid-cap PMS has given 9.2%, 9.02%. So if you see it, mutual funds have also given similar returns. PMS has also given you similar returns. Why does one say that PMS will do better or AIF will do better or mutual funds will not do better? That is where your system 2 thinking has to come into play. Where are you investing? A mutual fund. If I'm a mutual fund manager and Ramalingam sir is a PMS manager, both of us are ultimately buying the stocks that are listed in the Indian stock market. If he is buying an Infosys, maybe I'm buying a Wipro. Maybe I'm buying a TCS. He may be buying an Asian Paints. I may be buying a Kansai Nerolac. He may be buying a Tata Steel. I may be buying an Asian Paints, for example. I may not like a steel company. I may say a paint company is better. But ultimately, both of us are looking at companies that are listed in the Indian stock market. He is creating a portfolio of 25-30 stocks. I may be creating in some funds a portfolio of 25 stocks. In some funds, I may be creating a portfolio of 30 stocks. It is like saying whichever school I study, when I write the board exam, the question paper is the same. So whether I score 90%, Kalyan sir scores 85%, and Ramalingam sir scores 98%, the uniformity comes there because all of us on the same date at the same time appear for the same exam. The NEET exam is conducted pan-India for all students, 10, 20, 30 lakh students who aspire to appear for a medical profession course. That I could have gone to any coaching center. I need not have gone to a coaching center. I would have just sat at home and studied. Maybe my teacher in the school, 12th standard, is such a brilliant teacher. She provided me help. Maybe I went to 4 different coaching classes, morning one, evening one, and I went to some place and stayed there and studied. But ultimately, all these students are appearing for one exam, which is conducted by a board, and it is called National Eligibility Examination, NEET examination. If I clear that and my rank is good, I have a chance of getting admission into different medical colleges in India. Same way, whether you are doing it through AIF or PMS or a mutual fund, the underlying constituent, the underlying ingredient is the same. It is the same aloo, same onion, same carrot, same chili that is going into it. It is not even city wise. At least I can say if I'm cooking in Bombay, somebody is cooking in Chennai, and somebody is cooking in Delhi, the vegetables are different because of the environment, the farm, the kind of climate, etc. In stock market, there is even that difference is not there. You are buying the same stock, same company, same price, same time, traded in the same stock exchange. Even that difference is not there. So the belief that this can do better, that cannot do better is not the case. If it has to do better, something else has to be there. That is the question to ask. But the narrative is, oh, AIFs are better, PMS is better, mutual fund is not fashionable, it is boring, it is not meant for you. Everybody is doing PMS, mutual fund. So what if everybody is doing mutual fund? What does it make? Everybody is eating food. That doesn't mean that I don't eat food, right? So that is the way to understand how narratives get created and how poorly we get carried away by the narratives. Break it down, ask the question, what do I need? And the answer is there.
Thanks for your insightful answer. If you have any questions related to this or any other investment options or related to your financial goals, feel free to book a free appointment with our financial planner. The link to the free booking is given in the description below this video. Also, will you be interested to attend insightful investment webinars? Then feel free to register for our upcoming insightful enlightening investment webinar, and it is completely free. The registration link for the upcoming webinar is also given in the description box. If you like this video, please give a thumbs up. Also share it in your social circle. If you are not subscribed to our YouTube channel so far, please subscribe now. Bye.